Welcome to TradeTheMBI.com. This is John. This report is for the 9th, and there you had it. We had the little dip at the start of the Comey testimony. It was a tiny little move, and then as soon as everyone realized that nothing new was going to happen, and that, actually some things were cleared up, it actually caused the market to rally a bit, and just moving us right back in place to what we still expect is that 2450 range. We had seen the reset of the short-term buyers, and it was just a question of were we going to see enough of the midterm. We got it right here with the green moving just above the cyan, which was enough to give it the push. Fairly straightforward on that. NASDAQ in the exact same position, pushing out to and being ready for new highs. It's just when we were waiting for, the early fund money is held up into any selling, and there really is no alternatives right now. And TLT, treasuries are really an indication that some things are out of whack with perceptions and realities, because this suggests that there won't be a rate hike in things, and everyone else seems to be pretty convinced. Strange that you would be going for less and less yield, but that's what's happening. And USO, here we have continuation of that oil move from the short signal. We've finally had the potential for the possible break above, but this is what I love to see. When you don't get that steel reset of the short-term buyers, it makes it very difficult for any crossover to really have a strong push. And we're right back down to those were the lows. We actually took them out a little bit, and despite the whole cutter situation, I don't think people are worried about supplies and the effect that will have. Gold retreating just a little bit. We've known that there are these positive extremes that go all the way back to here and in between, and those have been filled back in place. We saw it starting with the rise here of the orange, but it just presents a new opportunity. When another signal, we've got a complete reset of short-term buyers. So when that comes back out of there, that becomes a pretty good opportunity. And we can see the early market finally starting to get out of this range. I mean, it's been days pretty much just stuck. And that happens. And you get that buildup, but you got to be ready for when it starts to break from it. We started to get a little more volatility in the last little bit, but still very modest. I think we've got to get towards that 2439 range, and then we would definitely start to break, and I would expect then the 2450 to be broken. That's really the short-term benchmark. It doesn't really have any major significance at this particular point. I think the stall in Congress is really what's preventing the market now from following through on the initial moves. There's the perception that there's going to be improvement in the economy, but we've got to actually see some kind of development, and it's just not taking place. And if they go to recess, then I think the market in the summertime is going to be much more challenged. That's okay, because I'm going to be coming to America in about 10 days, and I will kick some people's butts and make some things happen so that we can get this market moving. As always, though, trade well. We'll talk again later.